Income is a favorite word for everyone. When the income increases, we go give a party. But when it comes to the decrease of income, then we are not happy at all. The same thing happens at the nation's level also, which is generally known as a national income. When someone says that GDP has gone up, NNP has gone up, what exactly happened? We don't know. But we get a smile on our face that something is happening. But when GDP is going down, we are worried, even though we don't know exactly what is happening. So that is what we are going to devise in this chapter. The name of the chapter is National Income. Many times there is a confusion. Is it an income of government? The answer is no, it's a national income. Let's see what exactly national income is. So the question comes, what exactly national income is? Is it the income of central government or the income in total of all the states government and central government? The answer is no. National income is something different from it. Let's see what exactly national income is. As the name suggests, national income is the total income of nation and not income of government. National income means the income of nation, and the nation includes the citizen or resident, business firms and everyone. Whatever earning is there in our country in total is called as national income. So national income is the sum total of income earned by all these units, be it agriculture sector or industry or service or manufacturing, whatever it is, income of all together is called as the national income. The computation of national income is important from the point of view of economy, as it's an indicator of health of nation. Whether our GDP is going up or not is a question asked at the end of every quarter. So that is the indicator of economic health. In India, responsibility of calculating national income is of CSO, Central Statistical Organization. The national income of 13-14 was estimated to be more than 57 lakh crores. Of course, now 13-14 is a history. So let's see the definition of national income. National income is defined as the aggregate monetary value of all the goods and services produced in country during a given period of time, generally 1 year. Mark these words, goods and services produced. Production generally we correlate to goods only, but it is services also during the 1 year and within the country. So of course the definition, whether country, it can be defined like the boundaries of countries. If a person is preparing a software and selling it to US or UK, is it national income or not? The answer is yes, but how? Of course we are going to discuss in detail. So, for example, land, labor, capital and entrepreneur, these are 4 pillars for production. Everyone gets the income. When you make the total of these 4 incomes, it becomes the income of nation. So, it is one of the simplest mode to understand or calculate the national income. So, let's see the definition. Alfred Marshall, the labor and capital of country acting on its natural resources produce annually a certain net aggregate of commodities, material and immaterial including services of all kinds. This is the true net national income or revenue of the country or national dividend. So, from production's point of view, if we observe this definition, it's very simple to understand. Whenever everyone is working, every single rupee invested, every worker is working, they produce something, either goods or services. So whatever they have produced in a country is a national income as defined by Alfred Marshall. Now, Mr. A.C. Pigou. The national dividend is that part of the objective income of community, including of course income derived from abroad, which can be measured in terms of money. So now the definition goes from income's point of view. As we know, expense of one person becomes income of the other person. So if we make the aggregate of income of all within our country plus from abroad, it should be a national income. It should be matching with the earlier income ideally. So from income point of view, the definition is given. Professor Fisher, the national dividend or national income consists solely of services as received by ultimate consumer, whether from material or from their human environments. This is from consumption point of view. If someone is producing something, it means I must be consuming it. For example, if a company produces 10,000 units worth rupees 1 lakh and the same is consumed by 10 consumers, then you take the production of company or you take the consumption of 10 consumers. Ideally, the amount should be 10 lakh only. So it is from consumption point of view. So we have seen three definitions, one from production, one from income and one from consumption point of view. Let's see the features of national income. First, national income is a macroeconomic receipt. When I am talking about an individual, Mr. X, Mr. Y is micro. When I am talking about a country, it is of course a macro concept. It also includes net national income from abroad. As I said, if Mr. A is manufacturing a software and selling it abroad, the income from it is also added in. Time period is a financial year. The national income is calculated for a particular financial year, of course, for comparison basis. It's a flow concept. Flow in the sense, it is calculated during the year what happened. Like for trading P&L, we write it as for the period ended is a flow. For balance sheet in accounts, we write it as on. It's a stock concept. So income is a flow concept. Whatever you have earned during the year. Next, only final value of goods and services are included. Of course, WIP is not included. For example, if the raw or WIP soap is manufactured by someone, same is taken by the other, and the final soap is manufactured, then the finished goods shall be considered. Even second-hand goods are also not considered because they are already manufactured, but commission on that second-hand goods sold will be a new income can be added. It's an interesting case, of course. Net aggregate value of all is taken, not the gross. Net final figure is taken, and money valuation of goods. Goods in quantity are measurable, but goods to express it in national income, it must be expressed in monetary terms, money measurement concept. So these are the features of national income. So national income can be expressed in different terms, that is GNP, GDP, what exactly it is, we are going to analyze it. So, national income is defined as aggregate monetary value of all the goods and services produced in a country during a given period of time, generally 1 year. The following are various concepts associated with national income. Let's see what is that: GNP, GDP, NDP, NNP and personal disposable income. GNP can be at market price, factor cost and all that. So, let's see in detail what exactly it is. GDP, NDP, GNP and NNP are measured at market price as well as at factor cost. Now what is this market price and factor cost? See, for example, if I manufacture one table by paying rupees 10,000, that is land, labor, whatever cost is there. So 10,000 is a factor cost, factor of production cost. But of course I will not sell it at 10,000. After this 10,000, some taxes will be added. Let's say 1,000 rupees taxes added. Let's assume 500 rupees subsidy given by government to me. So 10,000 plus 1,000 taxes, 11,000 minus 500 subsidy, and then I added my profit of 800. So 10,500 plus 800, 11,300 will be the market value, that is called as the market price. So 10,000 was the cost, while 11,300 will be a market price. So market price paid by is the price paid by consumer, that is selling price. This monetary value include indirect taxes, exclude subsidy which are given by government. So as we can see, cost of production, of course in this concept profit is also added, but it is taken as cost of production because entrepreneur is also the factor of production. So cost of production including profit, add taxes, of course indirect taxes like GST now, minus subsidies given by government, if any, becomes the market price. So production cost plus taxes minus subsidy is a market price. So GDP and NP are measured as these prices as we have seen. If we wish to come back, of course we have to make the reverse calculation, that is from market price we have to reduce the indirect taxes, add back the subsidies so that you will get the factor cost, that is production cost including profit. So I repeat, while coming from cost to market price, we added indirect taxes. So reduce it, we reduce subsidy received by government, add it back, and you will get the factor cost, that is the production cost including profit. So these are two concepts. I hope you must have revised it perfectly, that is the cost and market price. The difference is about indirect taxes and subsidies only. So let's see what are these concepts now, GDP and GNP and all these concepts. So let's see the first one, gross national production. It is C plus I plus G plus X minus M plus R minus P. So let's see it in detail. But the question comes, what exactly C, I, G, X, M, R, P means? C means consumption, private consumption, as we go in the market and purchase something, that is a consumption. Then comes I, that is investments made. G is equal to government expenditure. X is export amount. M is import amount. R means receipts from abroad. For example, someone has invested something in US bonds, then he will get some interest or dividend on it. That is receipt from abroad. P is equal to payment to abroad. For example, if an American invested some amount in India, then Indian company will have to pay the interest to him. So that is payment abroad. So C consumption, I investment, G government expenditure, export, import, R for receipt from abroad, P for payment to abroad. So let's start understanding these concepts in detail. First comes gross national production. That means whatever our country has produced must have consumed by someone. That is what is consumption plus investment plus government has purchased something plus we have exported something, the income from it, minus imports because that amount has gone out, plus receipt from abroad minus payment to abroad. Now if you want this GNP, this can be all about the unitary terms, that is in units terms. But if you want it in rupee terms, you have two options, as you know. It can be either in market price terms or at cost. So if it is market price, then take the market prices of all. For example, consumption, whatever consumers has paid. Investment amount, government expenditure, whatever is actually paid. So take the market prices of all and you got GNP at market price. If at factor cost, you know what to reduce, what to add back. You have to reduce the indirect taxes from the above amount and add back subsidies if any received. Now comes GDP. What is GDP and what is GNP? In GDP, just receipts from abroad and payment to abroad is not considered. That means from GNP first, if you remove R minus P, that is receipt from abroad and payment to abroad, you will get GDP at market price. As it is at market price, and if you wish to go for the factor cost, of course you know what to do. Indirect taxes reduced and subsidies added back. Now after GNP and GDP, it comes NDP, that is National Domestic Production. Then what is the difference between gross and national? The only difference is of word depreciation. In national domestic production, gross domestic production, depreciation is considered as cost, while in NDP, depreciation is a non-cash expense. It is removed from it. So if you want NDP at market price, then take the GDP at market price, as we have seen above. Just reduce depreciation during the year. Of course, there is a logic behind not taking depreciation also. Capital expenditure is already added. So again, why to take depreciation? Could be a perfect question. So if you want NDP at market price, reduce depreciation. If you want NDP at factor cost, from NDP at market price, just reduce the indirect taxes, add back subsidy as we have discussed earlier. Next comes, we have seen GNP, then we went to GDP, then NDP, now comes NNP. What is NNP now? From GNP, where the RNP was not considered, from GNP, you reduce the depreciation and you got the NNP at market price. In that again, reduce indirect taxes, add back subsidy, you will get NNP at factor cost. So that was 9th concept. Now next comes national income at factor cost. What exactly national income is? From all these above 9 different concepts, which is exactly the national income? It is NNP, that is the 9th concept. When it is taken at factor cost, then that is called as national income. Then what is the use of all these other concepts? It is for measurement purpose, it is for comparison purpose. But when someone declares that, or finance minister declares that our national income has increased by 10%, it means actually NNP has increased by 10% at factor cost. These 10 concepts are extremely important to understand and to write the answer. Next comes personal income. Of course, it is altogether a different concept. Sum of all incomes received and accrued from all the sources. It means whatever cash transactions done during the year plus outstanding is called as personal income. Actually, it is not a personal concept, again at macro level. And personal disposable income, of course, after reducing direct taxes. For example, if overall salary of all the salaried person is, let's say, 2000 million rupees, from which 50% tax, I wish 50% will never come as a direct tax, but let's say from 2000 million rupees, 50%, 1000 million rupees goes as a tax. So 1000 million remaining amount is disposable. You can dispose it off, you can use it for your own purposes. So that's the difference between personal income, which is inclusive of taxes, and personal disposable income is exclusive of taxes. So these 12 concepts are extremely important. So revise it properly so that it will help you to get the marks. Now coming to the next thing, how exactly the national income can be measured? There are basically three methods. Output method, whatever you have produced, make the total of production of goods and services by all, you will get national income. Second, income method, find out the income of all, expenditure of one is of course the income of the other. And the third one is expenditure, what exactly. For example, if I paid rupees 10 lakh rupees for factors of production, land, labor, etc. So for me 10,000 rupees is their income, that is national, or I should say it is my expenditure, so it's nation's income, so expenditure method. While these four will say 2,500 per person into 4, so 10,000 is our income, so again it's a national income from income's point of view. So these are three methods for calculation of national income: how much production is done, how much income received, how much expenditure is done. So output method or production its method. There are again two approaches: final goods approach and the value added approach. Final goods approach means the actual cost of units produced in our country. The value added means what exactly additional value you have added. In final goods, maybe the second hand goods will also be increased, but in value added it will not come, so it's a more appropriate approach. Income method, as I said, if you make the aggregation of income of all, then you will get the total income. This method is also called as factor cost method. Whatever cost I have paid for factors of production, make the total, add their income, you will get the national income. So output method, as I said, is total production of final goods and services, and income method is how much they have received. Expenditure method, how much I have expended while producing the goods or giving the services. So final value of goods and services, in output method only final goods and services are taken and not WIP. So double accounting is not done. Income method, it is not applicable because ultimately they get income. Expenditure, again payment for final goods and services is considered. Second hand goods, in first output case it must not be considered as it is a part of the same production we have already done. In second case, yes, it is considered not second hand goods, but any commission etc. while selling the second hand goods shall be considered. In expenditure method, again second hand goods are not to be included. Indirect taxes and subsidies, in first output case you have to eliminate, that is you have to reduce because these are already added in the cost of production. In second case it is not applicable. In third case also you have to reduce it because these are already added. So I repeat, these are output method versus income method versus expenditure. Transfer payment or income transfer payment means giving donations etc. are not to be covered. For example, if my income is 10 lakh rupees, it is already added. When I am giving donation it to someone else, then it is not his new income, so it should not be considered. And in third, again it is not considered at all. Financial assets, whatever assets I have purchased is again not included in income method because when I earned my income, it is already added. Now again I am using the same format, it is of course not considered. But in third case also it is not considered because expenditure is already done on that machinery. Again we are purchasing and selling, is not a new activity. So these are three methods as we have seen. These are three methods: output method, income method and expenditure method. Ideally the national income by all three methods should be same, but it is not due to some limitations. Now coming to the last part, what exactly the difficulties we face, second last part, sorry. So what are the difficulties we face or any country faces in calculation of the national income? First part is called as theoretical difficulties, like foreign income. How to calculate exactly the foreign income will be a problem. Income from illegal activities. From foreign income also, like hawala transactions, the cash comes in which is never recorded. Illegal activities, the income is taxable, but how to calculate that income will be a problem because nothing is declared. Government services, many times government gives free of cost services. Should it be added or not? A confusion. Unpaid services, many times the services are given, like housewife is working for her family, but still it's a service given, so it should be added, but it is never added in national income. Required to adjust with price level changes. If I say that the national income of 10 years back was much lower than today, I cannot say so because inflation effect is also there. That should also be considered, which is not actually so easy task. Estimation of production for self-consumption. Many times the farmers or someone produces for himself or his family. It never comes in national income. So it is produced, but it is not added in national income. Transfer payments like donations, etc. Again, there is a conflict whether it should be added or not. Now, some practical difficulties are there. Valuation of inventory. There is no hard and fast rule. There are so many methods for valuation. Then how to get the perfect amount. Illiteracy and ignorance. Many times the income is generated, the expenditure is made, but nothing is recorded and they don't find it important. Depreciation. For so many years there is a problem, conflict in this, whether it is an expenditure or not. Existence of non-monetized sector, where the money transactions are not there, barter exchange is there. How to record it? That will be a problem. Of course, it is not a big area nowadays. Occupational specialization is lacking. There is no specialization. Someone does the agriculture work, he is a farmer, so he does whatever he wishes to do. So again, the specialization cannot be found. How to add it in income? Capital gain or losses are ignored, but of course nowadays tax provisions are so strong that it is not playing an important role in difficulties now. Inadequate or unreliable data. Who will keep the data? If a person is a small shopkeeper, how will he keep the record of each and every transaction? That will be a problem. And double counting, as we discussed, selling the same machine again and again could be added in the national income and it will create a problem, a fictitious income. So these are general difficulties divided in two parts, theoretical and practical, in making the valuation of the national income. Now coming to the last part, there is circular flow of national income. How exactly the national income flows? National income refers to the monetary value of goods and services produced in a country during a year. It's a total measure of flow of current production. In a closed economy, there exists a circular flow of economy between household and firm. This is explained by modern economists through a model of circular flow of economic activity. In very simple words, a person gives services to the company and gains some amount. For him, it's an income. For company, it is an expenditure. Now, whatever company manufactures, let's say it is manufacturer of a toothpaste, again it is sold to the individual consumer. Now, for consumer, it becomes an expenditure, and for company, it becomes an income. It's a perfect circular flow in an economy. The circular flow of national income and expenditure refers to the process whereby national income and expenditure of an economy flows in a circular manner continuously throughout the time. So as we can see, there is a household, that is an individual, and firms. Household gives service of land, labor, capital to the company or organization, and against which it gets the factor incomes, that is the rent, wages, etc. At the same time, firms produces goods and gives services to an individual or household and gets that consumption expenditure or income from them. This is called as circular income. Expense of one becomes income of the other and vice versa. Circular flow of national income. So this is again an important concept. So the income that is earned by providing factor services is utilized for buying the goods. I earned the income, I used it to purchase a toothpaste. And the production is a continuous activity at the same time. Human wants are unlimited. So of course this flow is going to be having a long life. The companies needs the individuals and individual needs the goods and services given by the organizations. In this way, it was a circular flow of national income. So that was all about the concept national income, the income of a country. We have went through the concepts of national income, its methods for valuation, and variety of concepts like GDP at factor cost, GNP at market price, personal income, personal disposable income. Each and every concept is important for our examination. So revise each and every concept properly, get the perfect whole on it, and get full marks from this chapter also. Good luck.